Okay, so in this video, we're gonna give a little overview of Wyckoff and a common mistake that most people make when they're getting into Wyckoff or they're starting to trade Wyckoff. And basically, right here, this is a distribution schematic. Everyone knows all the schematics in Wyckoff: the accumulation, the reaccumulation, the redistribution, and all of them. Okay, so you can search it up anywhere. You'll see this, or you'll see the other accumulation. So basically, the problem is with these schematics is when people see these schematics, they think, oh, this is the holy grail. They're gonna look for exactly this in the market, and then they're gonna trade it. But the problem is you won't see this in the markets. The markets are not gonna print a distribution that looks exactly like this. If that was so, and every distribution looked exactly like this, then everyone would be rich. In the markets, you'll rarely see a perfect distribution that matches this schematic like this. Rare, very rare. So basically, what you have to understand is you can't try to pinpoint every move inside of the schematic. You have to understand the moves inside of the schematic. So you have to understand the player supply, the buying climax, the automatic rally, the secondary test, because it won't look like this at all. This is what you're going to have to understand inside the schematics. This is what you want to focus on when you're looking for Wyckoff. What is the player supply? Because the moves are going to tell you that if you're in an accumulation or if you're in a distribution. If you're in a, and you want to look for, okay, are we going to accumulate or are we going to distribute? Depending on what type of market you're in, if it's bearish or bullish, okay? So we're going to go into CHFJPY real quick, and I want you to take a good look at this distribution right here, and then take a good look at this distribution right here. Leave it, okay. There's supply right there. Okay. You see how this distribution right here, we have the preliminary supply, we have our buying climax here, we have our automatic rally, we have our up thrust right here. Then we have our up thrust after distribution right here. We had a breaker structure right here, and we had our test right here. Came down, we had a last point of supply, and then we came down. You see the difference? This right here looks nothing like this. So if you were looking for this, you would have never realized this. But if you're focusing on the moves inside the market like this, and you've seen this breaker structure here, you would have understood that this was a UTAD, and then you could have connected all these other moves themselves. Okay, so don't look for this. Understand the moves inside of it. Okay, so we're gonna zoom in here because there's another distribution inside of here. The market is fractal, so anything that you see on the higher time frame, you're gonna see on the lower time frame exactly the same. I believe it was on the 15-minute. The UTAD itself had its own distribution. We have our primary supply, buying climax, automatic rally right here. This is our secondary test. We have a sign of weakness. We have our up thrust in phase B. So this would represent the second distribution schematic. Last point of supply here. Oh, I'm tripping. I put UTAD. Last point of supply here. Let me change this. And then we had our distribution that was here on the 15-minute time frame. We also came back up here, and we had another last point of supply right here. And as you can see, when this market came up, we tested the last point of supply here, and then we fell down like that. So I want you to take a good look at this distribution here that we just marked up, and I'm gonna search up the second schematic for the distribution. Here it is right here. Take a good look at this and take a good look at this. inside of the schematic. If you understand what the primary supply, the buying climax, the automatic rally, the secondary test, the sign of weakness, and the up thrust in phase B, the last point of supply, if you understand these moves, you're going to see a whole bunch of schematics and a whole bunch of accumulation and distribution. So we had a accumulation inside of here. Now we're going to go over inside the gray box. Okay, we have our primary supply here. This is our selling climax, automatic rally. We have our secondary test, which tested this our selling climax, and then we have our sign of strength here. Because we broke over the automatic rally, indicating that we could see higher prices. We'll have our secondary test in phase B. Then we have our spring. Let me make that capital. We have our test of the spring. We have our last point of supply right here. And this was just a short accumulation just to move up here and fill all of this imbalance in here. Mitigate our last point of supply here that tested our UTAD and phase B just for us to continue down as well. So what I want you to realize is I want you to focus on how the market is bouncing off of each other. So if I go back to the 4 hour, it looks all messed up now. I'll go back to the 4 hour. You'll see this test here was a test on our 4 hour distribution, but also was a test of our last point of supply that was created here with this accumulation. So we tested a last point of supply that was on our 15-minute distribution, as well as it acted as a test for our up thrust after distribution on our higher time frame. This right here on a higher time frame, 4 hour the distribution we had. This was also the test for our last point of supply here and the test for our UTAD on the higher time frame. Let's see. Let's look at Euro NZD. I believe I had something there too. Yeah, on the 4 hour. Okay. We have an accumulation right here. Here. We have our primary supply here. This was our last pullback that indicated that this market is slowing down. Selling climax. We have our automatic rally, and all this automatic rally did was come up and tested this order block here, took out liquidity. This order block that took out liquidity here, all it did was come and mitigate this right here. Okay, after that we have our secondary test. Have our secondary test in phase B, but we did not get the spring here. We created a creek. If you go on lower time frames, we created like a small little creek here. So this would have been our jump over the creek. This was our last point of supply here. And this was our buy up last point of supply right there before we move towards the upside. Let's look at possible entries that you could have taken inside of this Euro NZD accumulation that happened right here. The best possible entry you could have taken was at this last point of supply here. Let's zoom in, and I'm going to show you how you could have taken that. Okay, so when we had this secondary test in phase B, you can see that this candle right here took the liquidity of these recent candles here and we move to the upside right here. This is on lower time frame. If we zoom in, okay. Afterwards, we came down with this candle here, and we mitigated whatever was inside of here. I don't know if it was imbalance or whatever, but I'm sure if you zoom in, you'll see it. There's probably a sponsor candle inside of there, but we mitigated it with this candle right here. So let's continue to go down. And here it is right here. This was our 1 hour candle that mitigated whatever was inside of here on the lower time frame here. Okay, and what you could also see is that we created liquidity before we came down here. We had imbalance, and we created some type of liquidity here before we came down here. So simply put, you could have had an entry right here at this order block. Your stop loss would have went under the body, so you could have had a 10 pip stop loss here. And understanding that this is a 4 hour accumulation, you're going to have some big targets here. Okay, so your first target would have been this high right here, which would have gave you a 13-1. Your second target would have been this high right here, which should have gave you a 20-1. And your last target, well, your target 3, would have been this high right here, which would have gave you a 28-1. And there wasn't many re-entries that you could have taken. I know in the 3 hour there was a fill of imbalance right here, but that's not optimal entry that I would look for, honestly. It filled it to the T, but that's not somewhere I would take this trade, only because of this big candle right here. I would have loved for it to pull back a little bit more so we can get inside of this candle and would look to take a trade inside of here, but we didn't get that. So there wasn't many re-entries that you could have taken here. Okay, so let's do that. Okay, you have a lot of entry points inside of here. Okay. The first one. Okay, so after you understand that you're inside, okay, after you understand that you're inside of the distribution and you know this is your UTAD on the 4 hour time frame, 15-minute distribution that you had inside of here, and you had your upthrust in phase B here. Your first possible entry here would have been at this LPS, at this one right here. This is based on the 3-minute time frame, since I can't get, I'm pretty sure there's a lower time frame order block or imbalance inside of here, but I can't get that right now. So, but this is a short entry of this right here, this last up candle right here that you could have taken, and it's only a 5 pip stop loss. A true upthrust in phase B or a true upthrust after distribution will never get broken, so you can take this trade right here. Let me spread this out a little bit more. So we understand that we are in a higher time frame distribution. Okay, there we go. It was a 5 pip stop loss. First target would have been this automatic rally down here. Could have targeted right here as your first target. Under here, let's say right here was your first target. You would have had 13-1. Second target would have been down here. You would have had a 21-1, and then your last target could have been the fill of this imbalance right here, which gave you a 28-1. Okay, so that could have been your first entry. If you didn't catch the first last point of supply, guess what? There's another last point of supply. Okay, your second entry would have been at this candle here, at that candle there. Your stop loss would have been above the body because this candle is so big. Another 5 pip stop loss. That's 2 entries there that you could have stacked upon each other and target the same exact thing all the way down here. So that's your 2 entries you could have in here if you wanted to target all the way down here or wherever you wanted to target. This is just entries that I'm showing you that you could have taken inside of here. So let's say you didn't catch any of these entries here. We had a test of the last point of supply here on our 4-hour distribution. Took the liquidity here. We filled the imbalance. We had this candle here that you could have taken from this one. And you could have put your stop loss at the top right here. You could have had a 7 pip stop loss here. If you wanted to be conservative, you could have put it for 10 pips. But let's say we're going to be aggressive here and we're going to have, let's do 8 pips right there. Target the exact same thing. Since now we understand that this is our test of our 4-hour distribution. Right there. Guess what? This last point of supply, this would have been a hard one to catch because personally what I was waiting for is I was waiting for this to come up here and catch this last point of supply up here. I wanted us to test this test right here, but we never got that. But there was also another entry inside of here. Okay, so this candle initially right here is our last point of supply right here, which mitigated this breaker right here and filled the imbalance that was between these, and it took liquidity as well. So what we're looking at here, once we see this last point of supply being formed here and we see the market come down, the market created liquidity right here. This high right here that didn't fill the imbalance. So once you see this high that came up here and it didn't fill the imbalance, you know that this is just liquidity being created that they want to take. Okay, so they create liquidity, take liquidity, fill imbalance, or mitigate a candle. Okay, that's basically what they do. This candle is our initial candle that filled the imbalance over here and mitigated our breaker. But we had this candle right here, which came inside of this other candle. So this now would be your point of interest here. So knowing that this whole thing is filled with a lot of imbalance, you know that the market is going to stop here once it fills this. So this is another entry you could have taken right here with your stop loss for a 5 pip. Taking this down right there. That would have been at a 12-1. Okay. And initially when we came down after the test, we created liquidity because we had this hit right here and then we had a whole nother hit right here, but it didn't break nor take the liquidity of this one. So we created a double bottom. So this would have gave you more confluence here, being sure that it was going to come down here and take this liquidity. That's why I put the pool liquidity down here, because we had this double bottom that was forming right here. And I'm pretty sure there's more entries on lower time frame that you could have taken, but I'm just going over the overview, and you could have had lots of gain just with this whole distribution. So just understanding the moves inside of the distribution is what is important, because the schematic will not be perfect. Okay. And initially what the market does is it creates liquidity, takes the liquidity, fills in balance or mitigate sponsor candle, and then continues with the move. As you can see, we did it multiple times here. We created liquidity here for the test. We took the liquidity up here, we filled the imbalance, and we mitigated our last point of supply here, and we moved down. Okay, our last point of supply here, there was liquidity right here. We took the liquidity, we filled in balance, we mitigated this breaker right here, and we continued down. And look what we did right here again. This first initial push to the upside did not fill the imbalance, so you can consider this a liquidity, and there's liquidity right there above this push up. So guess what? We came back up, took the liquidity, moved down again, filled the imbalance, and we moved down again. So back test and study the markets, because you will see this in every market. Okay, the markets are fractal. Everything that you see on the higher time frame, you will see on lower time frame. So just understand the moves that the market is making.